surprises from the Reserve Bank today, holding interest rates steady at a record low 2%. The RBA is keeping its options open. But evidence from the real economy suggests that rate cuts are failing to ignite business spending and investment. And that doesn't look like changing anytime soon. And the question of how to unleash those animal spirits for Governor Glenn Stevens remains as elusive as ever. Here's Phil Lasker.
With a cash rate at a record low of 2%, Reserve Bank Governor Glenn Stevens and his team have entered a stage in the cycle where cutting rates no longer sends a straightforward message.
When you're going into the uncharted territories of having a 1 in front of the interest rate, it may be the driver that we need to get some investment going.
But there's an equally good chance that it sends a message of failure. That despite the federal government's budget assistance to small business, the threat of property bubbles in Australia's 2 biggest cities and 2 rate cuts this year, the economy still needs even more of a helping hand. The March quarter business investment numbers confirmed the difficulties faced by the non-mining sector. They showed that non-mining businesses expect to cut back their investment despite record low interest rates.
We've got slow business investment due to factors offshore, due to low capacity utilisation, which again, another 25 basis points of interest rates is not going to change.
And lower interest rates can't prevent the end of the mining boom.
A rate cut would help, but it won't on its own make the difference.
Business has a shopping list of problems it says need to be overcome before the so-called animal spirits kick in and the sector can demonstrate the leadership policymakers are looking for. Certainty from Canberra, a more flexible labour market, lower energy prices and an easing in global concerns are among the changes that might force business to spend the capital it's sitting on.
Well, business isn't making excuses here. They're dealing in the real world. They're dealing with the constraints that they face, and there are a lot of balls in the air at the moment.
It's not a transition one-for-one from mining to non-mining. It's from mining to non-mining plus retail plus housing, and that is happening.
In a statement following today's board meeting, when the Reserve Bank kept interest rates on hold, the bank did not even suggest that another cut was likely. It simply said, having eased monetary policy last month, the board judged that leaving the cash rate unchanged was appropriate at the meeting. Information on economic and financial conditions to be received over the period ahead will inform the board's assessment of the outlook.
They're in data watching mode. They're just going to sit here and see how the data domestically and offshore track relative to their forecasts. And then secondly, if the data underwhelm expectations, then I think probably what that tells us is the RBA might consider at some point whether or not they do need to ease monetary policy again.
Tomorrow's GDP numbers will confirm that Australia's economy is running below average speed around 2.5%.
That's not disastrous growth, it's not very strong growth, but given we're getting such a weakening in mining investment and business investment, that's not a bad outcome either.
But it underlines the fragile state of an economy that could go either way.